So welcome back to the channel. In this video, we're taking a look at Ethereum with the merge impending. So this is going to occur very, very soon. I'm going to go over the potential dates for that in this video. But we're going to start here with some of the bull case and also looking at some of the price action. I think the most important chart to look at right now is not the US dollar chart, but the BTC to ETH pairing here. As you can see, these were the three resistances we mapped out ages ago. The first key resistance all the way down here at around 0.04 BTC, so around 4 million Satoshis, and we absolutely smashed through that after one little test around here, January 2021, smashed through it in April 2021 and haven't looked back since. Resistance number two, a key area, is around 0.055, 5,500,000 Satoshis. And then, of course, the top and third resistance there about 0.08. So it looks like ETH is coming down to test the second resistance here at about 0.055. So 5.5 million sats. This is somewhere I think we're going to see a nice bounce from if we get all the way down there. At the moment, clearly putting in some serious red candles on the weekly here. But that is an area to potentially bid from. And especially if we see Bitcoin price take a bit of a dump again, revisit the lows once more, and if ETH is down to about 0.05, so 5 million sats plus, around that area, I think it's a pretty good bidding opportunity as we enter in towards the merge. So these are the kind of price levels I'm looking for. If we do break through there, down here around 4 million sats, I think could represent a great buying opportunity. Not financial advice, but if you just think about what Ethereum has accomplished during the last 12, 18 months, all the product market fit that it has, other layer ones that have tried to, conquer but have not succeeded as of yet and haven't really got much traction either. ETH looks like the daddy. So that is my perspective on ETH right now. Also seen this over the last few days. Fidelity here, huge investment firm. So $4.5 trillion in assets under management. I'm sure everyone's heard of Fidelity, one of the biggest asset managers out there. And they're planning to offer custody and trading services for ETH for their clients. This is huge. This is very bullish for Ethereum, clearly, and this is a lot of money that can flow into Ethereum here. So they have a digital assets subsidiary, and apparently they're going to be hiring up to 200 people to build out the infrastructure needed to provide safe exposure to the Ethereum network. So when you've got one of the biggest asset managers in the world saying, look, we want to start offering Ethereum-based services to our client base, they know the demand is going to be there, if not already, and they can see into the future and say, look, this is a big movement. Ethereum's something massive. We want to get a slice of the action. And this comes just a month after Fidelity Investments announced they'll be providing investors the option to allocate up to 20% of their retirement plans into Bitcoin. So we can chalk off both Bitcoin and now ETH under Fidelity's, microscope here. So in specifics here, around 110 tech leads will be utilized to actually build out this infrastructure for ETH, and around 100 customer service specialists as well. So clearly they're expecting some big interest in the Ethereum side of their services here. And as they restate here, 4.5 trillion in AUM. So this is the big dogs coming, circling, and saying, look, we're going to put a flag down here. We want people to start investing in ETH through us. That is a big, big tick mark for Ethereum. And also good to see that this is during a downtrend. They're not getting, their clients to FOMO in at the top. They're hopefully going to be buying some generational opportunities on Ethereum. So Fidelity Digital Assets President Tom Jessup said this: we're trying to build infrastructure for the future because we measure success over years and decades, not weeks and months. So very bullish from Fidelity. As I was doing a bit of reading around here and just looking through the website, clearly these guys are very, social conscious. If you think about, as you can see, the key three letters down here, ESG, environmental, social, and governance. These are some of the key drivers for big institutions to invest right now. And Ethereum is going to be hitting some KPIs for ESG with the merge due to the fact it will become a lot more eco-friendly. More on that in just a second. But this is a a resounding theme on the actual Fidelity website, and they got some podcasts down here where they start to talk about ESG and things along that nature. So clearly you want to see where the big asset managers are looking. ESG is a key concern for them, and so it probably should be for all of us as well. And ETH is going to be starting to tick some points on that. So a little bit of negatives here as well. I do want to cover some of the negative sides as well, because you don't want to just represent a full bull case, but here we go. Ethereum GameFi activity collapses by 96%. So this is from bitcoinist.com. Goes into some of the details around network usage for GameFi, and yeah, things looking pretty damn bad. But of course, yields drop as we hit a bearish trend in the market, and thus people aren't playing these games to earn. There is no play to earn because you'd be earning pennies, and people aren't going to relinquish their time for that. So if we just look at one of the top ETH potential games here, Illuvium, which has a current land sale going on right now, hardly a murmur on the chart here with that land sale taking place. Still around maybe just $300 if that. So this is kind of the bearish side of it. Activity on the network is down huge, and this can be seen through the cost to actually process a block here. So the amount of GUI required here to send a transaction. Gas price for a fast transaction now, 37 GUI, and the cost of this is around 13 cents. Only for a standard transaction, 30 GUI, and for a safe and low speed, we're looking around 27 GUI here. So the block space is becoming cheaper on Ethereum. So we have these obviously huge swings in the crypto market, periods of great overpricing, and then we have underpricing potentially here as well. But this affects things. If you're looking to invest into Ethereum, you want to look at the key metrics. KPIs are down right now, so there is some bearishness on that, but we can really just blame that on the market and the swings that we see in crypto. However, on Watch the Burn here, you can see that the base fee here has been declining over the recent months. There's a bit of a spike here in January. I think this was whilst people were unloading bags, and then things have been on the down. So KPI is going down here, but we can see the burn has still been going on. EIP 1559 went live in August of last year, and this means Ethereum gets burned each and every block. Obviously, the more usage and the more demand for the block space, the more the burn. So in times of less usage, the amount being burned is going to go down, as you can see from the chart here. Nice picking up here into November as the market peaked. A real drop off in December. January, quite a lot of activity on ETH. I think the NFTs were going wild once again. We burned 398,000 Ethereums. Then we fast forward to say April, only 137,000 were burned. Overall though, pre-merge, which is where we are now, we haven't had the move from proof of work to proof of stake. The net issuance is always positive. We haven't seen a deflationary month as yet. So this means more ETH is hitting the markets each and every month, maybe small from some months, larger amounts on others. So in November, just an additional 36 or 37,000 ETH hit the market. So that was the net issuance there. So not huge inflation numbers there. But then we have, for example, March here, the net issuance was 300,000 Ethereum tokens in March. So this brings us on to the point of what will happen when we go from proof of work, which is where we are now, to proof of stake. And during this period, the amount of ETH produced per annum, so yearly, will go from roughly almost 5 million Ethereum tokens, or 4.950 to be specific, so 4,950,000 ETH, and that will reduce roughly between 80 and 90%, somewhere to around 650,000 Ethereum per year. If you put that into dollars, at around a $2,000 per ETH price point, you're looking at something like $8.4 billion of ETH that will no longer hit the market. That is potential sell pressure that will no longer be there. So you can see how the tokenomics change here with less issuance will have a big impact. And this doesn't even take into account EIP 1559. So huge reduction in issuance. If we have, bullish periods in the market and we have a lot of usage for block space, the burn will eclipse the amount of net issuance. So net issuance will actually be negative, i.e. deflationary ETH. From some of the calculations I've found online, they were suggesting that the gas costs, the amount of GUI would need to be around the low 20s for ETH to be deflationary. And as you can see, even now, with a very quiet market, we're still around 30 GUI. So it does look like ETH will be deflationary, but a lot of bull and bear case around that. Some people disputing the numbers that I found online. So I didn't want to put anything down here as a certainty, but potentially we will see ETH go deflationary once the merge takes place. So what is occurring right now? Well, currently there are, some tests ongoing. So these are the final tests before potentially hitting mainnet. So over on the Ropsten testnet, this is where people have been staking for ETH 2.0. They're currently going to be going live with a test on Ropsten on June the 8th. So around 1 week from today. And Ropsten is Ethereum's longest running testnet, and the simulation will help developers and validators ensure a smooth transition. If all goes well with Ropsten in June, it looks likely that we will have this go live on mainnet at around August of this year. So fingers crossed for no hiccups. I have seen a few articles stating that there have been some hiccups with some block reordering issues. So we will see. Wait with bated breath. Anthony Sasalo here. How can the merge be priced in when people still believe the following? That firstly, it will reduce layer 1 gas fees. This is incorrect. This does not affect gas fees during the merge. That is not something that's going to be sorted here. This is later in the ETH roadmap with sharding, etc. They also believe that all staked ETH becomes unlocked at the merge. I think Raoul Pal's been guilty of stating this a few occasions. This is also incorrect. There's like a 6-month window after the merge hits mainnet where the staked ETH2 amounts of Ethereum that people put in around December 1st of 2020. Those coins can become unlocked, but this is 6 months post-merge. So this won't happen all in one go. And this will take obviously some time for that to occur. So it's not like 13 million Ethereum tokens are just going to hit the market on day one once the merge happens. 6-month time lock, and then a gradual process from there. So this actually leaves us a bit of a juicy period where we could have deflationary ETH, loads of tokens locked up in ETH 2.0 contracts, etc. And in that 6-month period, we might see some serious appreciation in the price of ETH if everything goes well. Then people also believe 32 ETH is required to run a full node in a proof of stake world. And he's saying that is incorrect, all completely false points. Ergo, the merge is not yet priced in. Over on the ethereum.org website, they've put together some useful information on here. So earn rewards while securing Ethereum. Currently on the ETH 2.0 contracts here, around 13.3 million ETH are currently staked. And these individuals are getting a roughly 4.2% APR. Once the merge goes live, the APR is likely to go up quite a bit. Again, from some of the figures I've seen, ranging from roughly 8% to 10% in yield, which will be very nice indeed. Some people stating this will help, really get ETH to rival the bond market. I don't know if that's a bit too much of optimism there, but that's the kind of thing people are thinking about here. You can obviously stake as an individual and earn rewards. This goes into the kind of behavioral stuff behind this. People are going to be staking ETH to get more ETH and then restaking, trying to compound, etc. And as more ETH is actually staked, the more secure the network becomes. So a bit of a positive feedback loop there. People are going to continue to stake their Ethereum, try and compound things, makes the whole network more and more secure. And as it becomes more scarce, price gets driven up as well. This helps with security. And of course down here, sustainability efforts as well, all good for ESG, as we've seen with Fidelity on top of that as well. So I think institutions will come in for ETH bags at some point. And of course you can stake this at home if you've got 32 Ethereums. If you haven't, there are third-party services that can be used. Rocket Pool is a good one as well. You could have maybe 2-3 ETH, even less, and actually get involved with like a shared pool. You want to make sure you hold your own keys, but if you are a newbie and you do not know how to hold your own keys, with safety, then check out one of our partners here, BlockFi. Even if it's not ETH, other assets on there right now. Stablecoins around 7% APY. They've got Cardano at around 10% APY, Polkadot 15% APY. Check them out. There'll be a link down below and it will help me out as well. But I would go with holding your own keys if possible. So a bit of a TLDR on the Ethereum Merge here. So June the 8th, the Ropsten testnet goes live. So roughly a week from today. If everything is okay with that, no hiccups, we're on track for an August mainnet start date for the merge. This would mean ETH issuance will reduce by roughly 80 to 90%. This is a big change in tokenomics. On top of that, the move from proof of work to proof of stake means less energy consumption. Think ESG, think institutions buying ETH bags. All positive stuff. The merge does not reduce gas fees. That is something to reiterate here. And the circa 13 million ETH staked on the Beacon chain doesn't unlock for 6+ months post the merge, and they will not all unlock together. There'll be a bit of an orderly queue about things if people want to unlock. There will be a set amount that can be unlocked maximum each and every day. So don't worry too much about a dumpage scenario, but I think during that 6-month block of time between the merge and the unlocks occurring, could be some juicy stuff in store. This also sets ETH on a path towards scalability. So next up on the roadmap, they'll be looking into sharding. So 12, 18 months down the line post-merge, you can think about all the developer resources going into the merge. They're going to be able to focus on sharding the blockchain and making it hugely scalable. And here we have major behavioral changes. Currently, those who are mining Ethereum have to use hardware. There is a cost to doing this. There's energy consumption involved. Of course, you're going to have to sell some of your ETH to offset the costs. But the economy will move from mine and dump over to a stake and restake. It's compounding, you know. Individuals like me, you, people who could not possibly know how to do some proof of work mining will be able to take part in proof of stake mining, even if that is through third-party sites. So this is a major, major behavioral change for ETH, and something that I think is very, very valuable and will cause, big price appreciation in the future. ETH is also like to be deflationary, as there will be such less issuance, plus EIP 1559 going live, and we're having less issuance, more burn equals good times. And finally, a bit of trivia as well from the research I looked into. Block time will change from roughly 13 seconds during the proof of work phase. Under proof of stake, we're looking around 12 seconds per block. So I don't think that will affect anyone at home, but a bit of trivia nonetheless. So that is it. That is the TLDR on the Ethereum Merge. If you enjoyed this one, make sure you subscribe to the channel. Leave me a nice comment down below. Check out BlockFi via the link as well. I'll see you in the next one. Goodbye.